This webinar will teach you the best moving average strategy for day trading Forex, an easy crossover strategy that anyone can use in all different markets. This strategy can be applied to Forex, stock, futures, options, and cryptocurrency markets. You may have heard of the moving average crossover strategy, but you most likely are doing it wrong. In this video, you will learn how to stop making mistakes and use the best moving average crossover strategy. First, I want to show you the disclaimer real quick just to remind you that this webinar is for illustrative and educational purposes. We are doing it as the markets are currently trading, and this is a real-time example, but there is a bit of a little lag because of the streaming software. And remember, this is for educational purposes only, no intention to promote you to do any trading at this moment. And about me real quick, I have 33 plus years trading stock options, binary options, futures, and Forex. I have a degree in finance from DePaul University and 20 plus years of trading floor experience from the CBOE, CME, and CBOT. I'm also president and owner of Forex Trading Unlocked Incorporated, author of the book High Probable Japanese Candlestick Patterns, and also the author of the Tiger Forex Report. And with all that said, get ready, all of you bulls and bears out there. Okay, the worst mistake that many traders make is that they take a position when the moving average crosses over. When the faster moving average crosses over the slower moving average, traders initiate a buy trade. This is because it signals the beginning of an uptrend. Conversely, when the faster moving average crosses below the slower moving average, traders place a sell trade. This is because it signals the beginning of a downtrend. Wrong. The biggest flaw to this approach is that it only works when the market is trending. Range trading markets generate multiple false signals. This will not bode well for your trading balance. As you can see right here in the Euro US dollar, there was recently a crossover for a sell signal. Of course, the market now is rallying. Over here we can see where there was a long position, but if you held that until this recent sell signal, you really wouldn't have profited very much. You can see here that it was kind of sideways, and we had a short position that obviously did not work. And then also back here, we did have a nice long position that did yield a positive trade. Now, if you look at this green circle here, this represents a longer moving average, which takes even longer to initiate. This trade here would not have yielded very much, and if you waited all the way until it crosses again to get out, well, if the market's going lower, that definitely wouldn't help you out there. So that gives you an example of how the regular moving average crossover is not the best way to find a signal, okay? And remember that another mistake traders make is using too many moving averages. This process delays signals longer, and this causes the trader to miss out on much of the trend. Remember, the reason you want to place a trade is because you want to catch a trend. There is also too much of a lag involved in the timing of order entries. In this case, less is more. Okay, so this method works best on longer time frames. Lower time frames tend to settle into ranges longer or have violent volatility. However, we have adapted this method to work on the 5-minute chart time frame on up. The key to this method is discipline with the order entry order, the stop risk order, and the target exit order. Do not deviate from the rules. Many methods are very complicated, but this one is very simple. Make sure the steps are followed properly. If you enjoy this content, please make sure you like, subscribe, and share on this video, and also leave some comments. We would appreciate it very much. All right, now the first thing you need to go to is to go to the www.forex-trading-unlock.com website. As you can see, I already have it pulled up. There is no login or membership required. Next, you go to the workstation page. This can be found on the navigation bar. Now scroll down. Once you pull up this page, as you can see, I already have it pulled up. Okay, now you want to scroll down to the chart. And you can see it says a Euro US dollar. Okay, now you want to remove this market information on the right by clicking that box. Okay, and then that gives you more room on the chart. Okay, and then we also want to remove this volume here by clicking that X. Okay. Secondly, we will set up our indicators. So now you go to the indicator tab and you click on it. Now you're going to scroll down until you get to moving average convergence divergence and choose this indicator. Below that, click the moving average exponential. And lastly, scroll down and select Supertrend Indicator. Now we will adjust our settings. Okay, so first you want to highlight the EMA here and see this little thing. Once you get over this, it says settings. Okay, you want to click on that. You want to change the length here from 9 to 200, and then you click OK. Now you click on the Supertrend Indicator in the settings. Okay, and then you're going to see this ATR length of 10. You want to change that to a 14, and the factor, which has a 3, you want to change to a 2. Now you click on OK. Lastly, you want to click on the MACD settings, and you're going to change the fast length from 12 to 13, the slow length change to a 21, and the signal smoothing length you want to change to an 8. Click OK. You are now completely set up. We will now show you how to apply this method. The 200 period exponential moving average defines our trend for us. If this is trending higher, then it acts as support for our trades. If the trend is lower, then the average acts like resistance. This is the whole key to knowing if you will take a long or a short position. The Supertrend Indicator gives us our entry, buy and sell orders. The moving average convergence divergence indicator signals when this situation is ripe to buy or sell the market. What do you think of this video so far? Leave a comment, question, or even a criticism to let us know what you think. It is very good for the algorithms, and we would really appreciate the help very much. Now let's search for trades. Okay, well, we do have a page where I've already set it up for you, but we're going to show you how this works. Okay, so the main thing is you can see how the 200 period moving average is going down here. All right, so the market is trending lower. So we would look for some sell trades. However, the market will always have corrections and also makes a turn. So we're not going to try and pick a bottom, because you never want to try and pick a bottom or a top. We do want to make sure that if we are too late in the trend or not in the trend early enough, that we don't make the mistake of putting on a trade when it's not right for the highest probability of success. So you know that when the market is trending lower, you're making lower move lows and lower move highs. When you're trending higher, you're making higher move highs and higher move lows. So as you can see here with this market, the market was trending lower. Here's a lower move low right here. Okay, and then over here, just above it, we have a lower move high, continuing the trend lower, which goes with our 200 period moving average. However, then we set this higher move low. All right, and then also we have the MACD here, let me gotta move that over a little bit. All right, where it crosses for a buy signal. Okay, just like it also crosses over here. It actually never really, it only dips down, it chops around a little bit, and then it opens up again right here. So we have the MACD crossing over below the histogram, which is big. We have a reversal of a trend possibly happening because we made a higher move low. And we had the Supertrend Indicator here already taken out by this lower move high. So in this case, that level here of the Supertrend becomes our next buy level. Or excuse me, of the lower move high becomes our next buy level. So because that confirms a higher move high. So you put an order in up in that area, and when it is triggered, you use the last swing low. In this case, it was the higher move low, and you use a projection here of 1.5, 1.5. So you want to make 1.5 times as your target. As you can see, the market was trending lower into a lower move low, lower move high, then you made a higher move low, and you can see how the trend was broken. We had already had our crossover underneath here. So that was confirms our ripe time to buy the market. The Supertrend Indicator had already been triggered, but we hadn't made a higher move high, so it wasn't ready to buy it yet. Remember, this market was still trending lower, and then the market came back down, held above the Supertrend Indicator here. The green you can see is still in buy mode, and then we have another surge, and right now the market currently is trading just below that triggered area. Okay, so once again, the market was trending lower, making lower move lows, lower move highs. All of a sudden we established a higher move low at the point when we'd already had a buy signal here below the histogram on the MACD, which gives us the reason to know that we're ripe to buy. And then we had the breakout over here, and that is when the market started to rally. So remember, once again, we had the buy signal in the MACD, but we don't get long yet. We had the buy signal in the Supertrend. We do not get long yet because we had still been trending lower. But then we confirmed a higher move low here. We have our buy entry stop in here, which gets us in the market. And then we know our defined risk loss is right down here at this previous low, and 1.5 times is our distance. Okay, and that is exactly how you do it. And we're going to show you once again where we had a trade here in the Euro US dollar earlier, where the same thing, the market had been going sideways pretty much, but it had been making lower move lows and lower move highs. So it was sideways, but it was still going lower, and the trend is very tight. Then what happened was we had a buy signal below the histogram, as you can see here, and then we had triggered the super trend right here. Still not time to buy it, but then the next bar after that, we take out we make a higher move high, and that's when we know that we have a buy signal. And once again, that defined our risk was the previous swing low with a 1.5 times, and you can see that that trade came to fruition and worked. Also, there was a sell signal that had occurred a little bit earlier right here, where the market had been trending higher, higher move low, lower move high, same thing, the super trend was triggered, the crossover had occurred, and then the sell signal happened. We risked the high instead of the low because it's a sell signal 1.5 times, and the trade happened. And just to show you that this works in other markets, even stock markets, we have one last example for you here from IBM, where we had made a lower move low, a lower move high, a higher move low with the crossover under here with the MACD. Once the super trend then was taken out, we had our buy signal, but we didn't have the higher move high, so we had to have the order in up there at the matching the highs. We broke out to the upside. We used this last swing low as our protective stop, and that gives us a target to the upside, which was a winning trade. So I want to thank you very much for you watching this video. If you liked it, please make sure to like, share, and subscribe to our YouTube channel or Twitch channel, and share it with your friends, and also leave some comments. Thank you very, very much. You have a great day.